I think that Elon Musk is still putting ultimate pressure on the U.S. car manufacturers, especially with them about to pay big dollars in labor disputes and new contracts.
When you look at what's happened with pricing, I mean, the average new car loan is over $760, which is up about 30 to 35% versus where it was back in 2020.
Where do you want to win in that? What is the most important? What are customers now demanding that they were not demanding previously?
All that and more, so let's get to it.
Talking Tesla, the share's getting hammered today, but still up about 100% so far in 2023. Kev, give me your take here. They're changing the Model 3 sedan, making it a little sleeker, but then they cut the price in their Model S and Model X in the U.S. and China. Is this, due to the fact that maybe a demand issue, or do you think this is more of getting ahead of some of the OEMs in this space, the EV makers, Ford, GM, that are going to come out with a plethora of models? Is this strategy, or is it maybe based on what's going on in demand?
Well, that's the tricky part to figure out. I have a counter trend take on this.
What?
I think that Elon Musk is still putting ultimate pressure on the U.S. car manufacturers, especially with them about to pay big dollars in labor disputes and new contracts. I don't know. We don't know for sure. We won't know till the numbers come out if demand is dropping. But think about this. From a China perspective, they should, with all the stimulus going on, you would think there would be some hope for the future, for China. And China's numbers overall aren't coming in as bad as expected. It's actually pretty firm here. And they have a laundry list of things that they're doing to stimulate their economy. Now,
an interesting take, but I'm going to have to respectfully disagree. I don't think Elon Musk or Tesla cares anything about the legacy OEMs and what they're going through. Tesla is able to see their order flow in real time. Just like the water coming out of your shower, you can tell if the water pressure is strong. If the water pressure isn't strong enough, you'll go ahead and crank that up another degree. Get that pressure that you want. The same is true with Tesla. I'm willing to wager that they're the only company that has a handle on their order flow. They see that water pressure getting a little light, they're going to pull some levers and make sure that the order flow is strong, just like your shower head. Now, if you pull the lever and the water flow is still trickling, you might have a bigger problem. Might need to call a plumber.
I think that's actually good for Tesla. The new revamped Model 3 sounds kind of interesting. A new sleeker model, more aerodynamic, longer battery life, a couple of stiffer body, improved suspension, improved rider quality. So they're making improvements and tweaks to the Model 3. But the price drops in the Model S and X, they're massive. And now he's got them both below that threshold for the $7,500 tax break.
Correction, the Model X qualifies. Model S would have to dip below 55 grand to qualify, but you get the point.
I think he's putting maximum pressure on U.S. automakers to try to compete with him. It is, like I said, I might be dead wrong on this opinion, but I think he is competing hard to be the overall winner, keeps putting pressure on the U.S. car markets, Tom. That's my take. Stocks not believing that. Stocks down 4.5%, Tom.
You might not be dead wrong, but two things can be true at the same time. There is no doubt Tesla's price cuts are putting insurmountable pressure on the legacy OEMs, and anybody making EVs for that matter, but that's the side effect. Tesla's goal has nothing to do with any other auto manufacturer. It is to put as many butts in seats, because once that customer gets in that Tesla, that's a customer for life. Will the legacy auto manufacturers feel this pressure? You bet your they will, but it is not the goal of Tesla.
Yeah, Alex, margins have been shrinking, but they still are double or triple what Ford and GM's margins are at this point. So he does have, the capacity to continue to lower prices, put some pressure on a lot of the auto manufacturers that are going to be releasing more models. Your take here on Tesla? I mean, it's still had a good run. It's still up 100% so far this year, and you got an example trade for us too.
Yeah, I don't disagree with Kevin's position as to maybe why they make these decisions. I mean, they also have a different model of how they actually sell the car. You go to Tesla directly. You don't have this dealership model as an intermediary where the dealers are buying those cars and then trying to sell them for higher. You're not going to be able to move prices around as quickly when you have that marketplace as opposed to directly at Tesla. What has Tesla's plan been all along? It was initially, and he wrote it down on the piece of paper, I think he tweeted it not that, a couple years ago, it was make an expensive car to make a less expensive car to make a more affordable car. That's the plan. The plan is to make Tesla affordable.
Correction, he didn't just tweet that a couple years ago. That's been on the Tesla website since 2006.
The plan is to be more efficient, but it's also an implicit admission that people aren't buying these cars at this price right now at the rate that we want them to. So they're going to be flexible with prices. We saw prices going higher at points. I mean, even think earlier this year, and now we've seen kind of the opposite. And so they're going to be malleable to the demand environment that they're in, where the rest of the marketplace is sort of stuck to the the MSRP price, and then add on the couple thousand because you never quite get that sticker price.
Your mother. Right. This is going to be the new wave. You have no idea which direction Tesla's prices are going to go. They're going down now. But as soon as demand spikes, what do you think will happen to the price? You guessed it. They're going back up. That's why I'm contemplating buying the Model X. This is the cheapest this Model X has ever been. But for how long? Your best bet is to buy the car as soon as you can afford it. Forget the price hikes, forget the price cuts. If you can afford the car, Tesla should be on the forefront of your brain. But that's what these price cuts are for, is to make these things more affordable in hard times. The macroeconomic conditions are insane right now. The American public is bracing for a new normal when you're talking about interest rates. These huge purchases, new cars, used cars, homes, are underlined by the interest rates.
I guess my point is that Tesla's not necessarily trying to be Ford or GM. They're trying to be Tesla.
Yeah.
And if that model puts pressure on GM and Ford, great. But in the end, this is a growth-minded company, despite the fact that it's a lot more mature than it used to be. It makes a lot of money now.
Yeah.
Still has a pretty crazy valuation for basically a car company or a manufacturing company. But you can see just simply looking at how analysts approach this name that it's more mature. What have we always said about Tesla? It's super polarizing. There's super bulls and there's super bears. Well, now 40% of analysts on the street have a hold rating.
Yeah.
I didn't see that 2-3 years ago. So I think that's a credit to what they've done at Tesla. But if you're cutting prices, unless you can say we're going to sell enough more cars, which they're not, to offset that loss in margin, it's going to impact the stock price in the interim. So I think it makes a ton of sense, the reaction we're seeing. But I think that this is a move from more of a neutral stance than a position of weakness. I mean, this is still the premier car company in the world, and it's still the premier growth company in the world of that space. That being said, self-inflicted wounds are going to lead to stock prices going down, and cutting your own prices is a self-inflicted wound.
Beg to differ. And this is why Tesla continues to surprise the stock market with their production and delivery numbers every quarter. And sure, the margins are going to decline. I just updated my model with my expectations earlier, and they're significantly lower. But you know what I didn't update? The amount of production and deliveries that Tesla will have in Q3. I'll tell you a little secret. They're going to be record-breaking. So yeah, the margins will be cut, but not as much as people would believe, because they're going to shatter Wall Street expectations when it comes to productions and deliveries.
Now's Mark Fields, former Ford CEO and a CNBC contributor. Mark, there's so much to talk to you about where the auto industry is concerned. We'll start here because Tesla is such a big mover and does have such an outsized impact on the market and is certainly still seen as the leader in EVs. Your thoughts on the dynamic pricing that we see this company on a near daily or at least weekly basis employing?
Well, I think what you're seeing with the latest moves, again, it's a situation where they're ramping up production and they obviously have a demand issue, and therefore they're reducing prices here in the U.S. I mean, they were very strategic in the S and the X price reductions, where now they're going to be eligible for some of the federal incentives. So clearly they have a demand issue as we go from kind of early adopters to mass adopters of electric vehicles in the U.S., and you're seeing their pricing reflect that. And I think that's what was reflected in their stock price today.
I get it. When you're talking about car companies, when prices are reduced and margins are razor thin already, it is a catastrophe. But when you have industry leading margins, not just industry leading, you're talking 2 or 3 times that of Ford and GM. You'd think you could step back and ask yourself, maybe this company is a little bit different. It's just hilarious to me when analysts try to fit Tesla in that automotive box and they just don't fit. And every quarter, they look silly.
Expand this out more broadly to pricing, particularly here in the U.S. It almost feels like the auto industry is going through something kind of similar to the housing industry. It's a sector that tends to be more interest rate sensitive because people are taking out loans against new and used cars. You've had these supply-demand imbalances with supply not there in recent years in the pandemic, and it seems to be holding up. Yes, prices are down if we look at Manheim year on year, but still so elevated versus just a couple of years ago. Where do we go from here? And I guess, how does that factor in then to, let's just start there. Where do we go from here?
Well, I think overall, Morgan, what you're still seeing a lot of pent-up demand in the marketplace. I mean, with the supply chain issues over the last couple of years, inventories right now are still nowhere near where they usually are at this point in time of the year, although they're up 70% more or less from last year, and that's why you're seeing some of the automakers increase incentives. But I think, to your point, when you look at what's happened with pricing, I mean, the average new car loan is over $760, which is up about 30 to 35% versus where it was back in 2020. And the same thing for used cars. So you have a situation in which affordability, literally, you have to make over $100,000 a year just to afford a new car.
God damn! He's absolutely correct on that front. These interest rates are much different than they were just 3 years ago. But I'm afraid we've entered a new normal, people. These rates aren't going back to 2020 levels. Not anytime soon, at least.
And what you're seeing in the marketplace and what you started to see in just this past couple of months, you're seeing prices start to come down. The average transaction prices are off their highs that you saw in December and September of last year. And I think you'll continue to see that. But it's all buttressed by a lot of pent-up demand that's still out there in the marketplace and will bleed off over time.
Mark, zoom out for me here. Talk about the U.S. automakers. If I were an investor, I'd be afraid to buy the domestic automakers when EVs are the future. They take fewer people to make, but the United Auto Workers are pushing for a contract here that one might argue is going to create some structural challenges for the U.S.-based industry. What's the counter-argument?
Well, first off, again, when you look at this transition to EVs and you look at the average age of what they call the vehicle park or the population of vehicles here in the U.S., it's over 12 and a half years old. So that will get turned over time. Vehicles are getting older. They need to be replaced. To your point, John, when you think about the UAW contract coming up, you know, labor represents plus or minus around 10% of the cost of a vehicle. That being said, these negotiations are pretty pivotal because when you look at the all-in labor cost for, let's call it the Detroit 3, they're about $65 an hour versus the import non-union companies, which are about $55 an hour, versus Tesla, which is about $45 an hour.
Damn!
You look at what the UAW has been asking for, which is over a 40% increase over the life of the contract. And when you add up some of the other things and benefits that they've come in with their opening position, I mean, you're looking at widening that disparity, you know, significantly. And the automakers cannot afford them.
Can they get half of what they want? And it still pencil out?
It'll still pencil out because when you think about it, John, the Detroit 3 sell a lot more large SUVs and full-size pickups than some of their import competitors. And those have quite nice profit margins on them.
For now.
But at the end of the day, as this transition to EVs happens, I mean, let's face it, EVs right now, with the exception of Tesla, nobody's making money And as the automakers, the legacy automakers ramp up, they're going to have to work down the piece costs to get those EVs to an acceptable margin. So you could argue for a period of time, there's going to be a restructuring of their margins. And that's why every penny counts in building a car. And that's why I think the automakers are going to be quite strong in pushing back on some of these demands from the UAW in their contract negotiations.
I hate to say it, but that's a no-win situation. Something's got to give, and neither side's going to be happy, but that's the definition of compromise, right?
This is not just another car show here in Munich. This is really a revolution in the auto industry, and for BMW, really laying out the future of what this car company looks like. Thank you so much for joining us. The Neue Klasse, what do you want people to walk away from Munich with about the sort of new and improved future of BMW?
Well, what we showcase here in Munich at the IAA is the future of the automobile at BMW. We are starting a new era of automobility, which is on the one hand fully digitalized and of course purely electric, and at the same time sustainable and ready for the industry which runs in circles, a circular industry. So we are showcasing the future of the next decade already, and behind me is the concept car of the Neue Klasse, which we will explain what's in there, whoever is here, and we are very proud of it. And in that car, or in the sum of cars we will showcase, is everything BMW can do on the innovation side.
Right, and part of that obviously is EVs, and we'll get more into that, but also there's all these other invisible parts of the car, the software, all of this digitalization that's going on behind the scenes. Where do you want to win in that? What is the most important? What are customers now demanding that they were not demanding previously?
In a word, Teslas.
Well, it's not only about a digital car. It's about the merger of software and hardware, how that fits together. It's not about the biggest screen or who writes the most line of code or just to put some digital feature in the car. It's how does it feel? How does that merge the car with the software? The best software is where the customer doesn't even recognize that the software is there to help him to be a companion with the car. So that idea of that the car is a companion driven by a software and hardware integration, that's the idea behind this car.
And the electric minis, what part of the market do you hope to touch that? There's obviously another part of the strategy that we'll be seeing here in Munich.
Well, we just had the keynote just 2 hours ago. Maybe you've seen it. That is a new era for Mini as well. Purely electric with a completely new, very Mini-like interior. And Mini runs in its own segment. And apart from the fact that it's purely electric, it's a global market segment. In China, where the car is produced, in the UK, of course, we will also have a footprint fully electric in Oxford. And of course, the rest of the world. Think about the United States, think about the rest of Europe, and think about South America. So that is a global concept. And I've driven the car many times. I'm truly excited about the new Mini.
And of course, Munich will also be marked by a lot of the other car makers that will be there, some of them for the first time, many of them from China, and a lot of the competition. How do you view that competition?
Well, BMW, as we are in transformation all the time, we embrace competition because we're very self-confident that we have a very good product offering. Good products will create market demand. And, you know, China has the largest car market in the world, and that there is an industry developing to supply that market, which at some point in time also goes on a global scale, just like we do. That is not a surprise. So let's embrace them, and let's try to have a fair and competition to build ever better products for our customers.
And you mentioned, obviously, China is the largest car maker. It's also been notably the economy has been weakening. What has been BMW's experience recently? Are you seeing further deterioration in that market?
No, we have a growth in that market this year, especially the growth in the purely electric segment has been doubling so far. We are very stable in the market because we are operating with purely electric cars in all market segments. Think about the i7, which is only launching that's not even 1 full year. We have the iX3. We are launching just the the new i5 purely electric with a long version, which is only available in China. So we're not afraid of that. And if you look at the current figures, BMW is growing in the Chinese market. And there's not one industry in China. There's BMW and there are other manufacturers. And I can only speak for BMW. We have a solid foundation in the Chinese marketplace.
And then in terms of the pricing for EVs, you know, we have Tesla out with another aggressive price cut. Are you going to have to look at pricing, particularly with a macro outlook that has sort of become more unclear?
Look, pricing, that is an everyday task. Do you reach the right price point? But I would like to reiterate, we are not operating in the base segment. We have never done that. We have a very super strong product, like a lot of tests show, and then we have strong demand. So we will never go down to a volume segment just to push volume, because we don't need to.
Concept car looked really cool back there. Oliver Zip is saying all the right things. Question is, can BMW do all the things necessary to make sure that they survive the decade? That era of elitism did not save them when the Model 3 reached volume production and came for their necks in the luxury auto market here in the US. They better hurry up with that concept car, because when the next gen vehicle hits the streets, everything else is just gonna be an afterthought. In conclusion, everybody and their mother has an opinion on whether Tesla's price cuts are good or bad. I'm here to tell you that if they're breaking records for deliveries and production quarter over quarter, year over year, it's only a good thing, folks. People can't buy the products if they cannot afford them. Luckily, Tesla has their finger on the pulse and they can see the demand in real time. And we get a glimpse of the first all-electric Mini Cooper. That's all I got for you today. Be easy. Peace.